Okay, so the Fed cut by 25 basis points and interest rates went up. What the heck is going on here? Stay tuned to find out. Okay, so it's been a pretty interesting couple of weeks. A couple of weeks ago, we saw mortgage interest rates around 6.5%. And then over the course of about a week or so prior to the Fed meeting last week, rates went all the way down to about 6.1%. And then after the Fed meeting, rates went up to about 6.35, even though the Fed cut by 25 basis points. So there's a couple things going on here. First of all, the Fed doesn't cut mortgage interest rates. They cut the federal funds rate, but there's a tight relationship and the federal funds rate will influence the mortgage interest rate. So when there's a 25 basis point cut to the federal funds rate, how does that impact mortgage rates and what's happening? So there's a couple of things at play here. The first of which is the market is pretty fast and usually faster than the Fed. And so what we saw is leading up to the Fed meeting, the market reacted. And so the mortgage interest rates went down to like 6.1. And so when the Fed actually made the 25 basis point cut, a lot of that cut was already baked in to the mortgage interest rates. So that's why we saw that decrease in mortgage interest rates. And so the other thing too is it's not just what the Fed cuts or when they don't cut that affects mortgage interest rates. It's the tone, the language the Fed uses. So when Powell comes out and he's hawkish or dovish, meaning he's really focused on inflation and fighting inflation and tightening up, or he's going to loosen up and be less restrictive, that kind of language will really influence the market and dictate where mortgage interest rates go. So that's why it's not so simple as to say, well, the Fed cut and therefore in the next coming days we should see the mortgage interest rates drop as well, because a lot of that has already baked in because again, the market's faster than the Fed. So here we are, we're low sixes, still a pretty great interest rate for your mortgage if you ask me, and I think this is probably as good as it's going to get for a while. But if you're asking, well, will interest rates go down? Maybe, I don't know, we've stopped trying to forecast that. It's really challenging, but instead of talking about what may or may not happen, I think it's more helpful to talk about the factors or the environments that would need to exist in order for rates to come down more. And here's a few. Number one, the Fed could change their policy. They could go from being more restrictive to more accommodative, and that would influence the federal funds rate and therefore mortgage interest rates. So the Fed could change their policy and their stance. The second is the economy. If we see jobless claims rise even more than they already are, that will force the Fed's hand to make decisions that will impact mortgage interest rates, bringing them down lower. If you ask me, I think this is probably about as good as we're gonna see for a while, like low 6%, which is a great interest rate, honestly, compared to where we've been in the 7s and 8s. So those are the factors that would need to exist in order for the rates to come down even more. So there you go. Again, there's no perfect market, there's just the market that you're in. And so we want to help you understand that. If you have other questions or want to understand, we want to educate you on the market that you're in so you can make the best decision for yourself and your family on whether or not now is the best time for you to buy or sell. Thanks for listening. I'll talk to you again soon.